Hi guys and welcome back to another video in my channel Order Flow with Ethan. So this is the workshop number 2. Today we're going to be analyzing the market of 17th April 2026. Trading of course the S&P 500 futures market. So welcome back to another video in this series where we just analyze the market of a given certain day. So we just choose it randomly. We just analyze, give a quick analysis of the market, see what happened exactly, what setups that we did study in our channel that happened in this exact day. And yes, this is what we're going to do in this video. So I hope you guys are doing well. Thank you so much for your time once again for watching this video, and let's get into it. So yesterday we had a great video about the 15th April. Okay, today we'll be analyzing the 17th of April, and we'll be checking exactly what happened throughout this day from setups, from all. We're going to be analyzing everything step by step. So I have it at 4 times. Let's make it 2 seconds. So let's speed up the market twice to see exactly what happened. So this is the opening market 6 minutes after the market opening. Yes, I'm gonna pause every time I see a setup, like here for example. Okay, so let me use pencil. Okay, no, just let me use a normal pencil. Like, let me do whatever I want. Okay, so here what I want you guys to see is these two PLCs. So what does this tell us? Well, eventually if you compare it to the volume profile, this is a low volume node. Okay, so the high volume node is exactly just below this one by 7 ticks, I guess. That's the high volume node, especially this level starts from here. But here we're kind of low on volume compared to this phase by 6 times, 7 times less. Okay, if you compare the highest one of each of the low volume node and the high volume node, we're 6 times or 7 times, 6 times, yeah. Okay, so what happened is that we had two PLCs at the same level. I already explained this one, opposite PLCs, if you guys remember, in the video titled The Importance of PLC. So the market was going a short trend. Eventually the volume is low actually. So as you guys can see, the volume is not that high here. So the volume is not so huge, but still they gave us a small imbalance, exhaustion here with the single print, like 9 against 66 imbalance happening at the low of the reversal. Then what happened next? We had two PLCs at the same level. Market went for a small correction, but then it bounced up. So I already explained this setup before. If you guys remember, when you have two PLCs at the same level, that usually means that this volume is some kind of resistance or support based on what happens next. So this volume decides a lot because both buyers and sellers are happy with 71.58. And yes, what you should look for is who's going to be stronger. Well, if both levels think that this price is actually good for them, well, you might as well look for who's going to get better or stronger out of it, okay? Who's gonna win the battle. If you have two people fighting at the same level, we should be looking for the person that's gonna win the battle. Well, eventually the buyers did. It went up, trapped some traders here, and then it went up again. So as you can see again, this candle is very important. I mean, 400, it went down for a correction, went to the same level, single print here with a imbalance. So the market here went strong. So that's the delta flip, as I already explained there. As you can see, market went for a small correction. Let's see what is it gonna do. Is it gonna go up or down? But supposedly it should go down, okay? But yes, there was no strong volume to tell you exactly what to do. So that is the problem with markets with low volume. See what I tell you? Okay, so we have trap traders here, as you can see. So going back to the subject, let me pause it. So, well, let me circle everything so you guys can see clearly. Eclipse. Okay, so where is it? Okay, this whole zone here was very important. Then this one, I'm gonna put a rectangle there, up, Nice. Okay, so let me just put it. Does look good. Okay. Sorry guys, I have ADHD. I cannot keep it up. So as you can see, what happened exactly is that the price gave us a big hint of a reversal. Okay, we've had single prints here, we had another one here, imbalance at the top of the reversal. Then what happened is the market went sideways. Okay, it didn't go to where it was supposed to go, it just went to the other way around. And this is your trap trader setup. I mean, it didn't succeed. We have three PLCs at the same level. I would usually take a sell here, especially if I see deltas. Okay, see what happened? The market went down. Quick sell, it give us 1 second to decide whether do you want to get in or out. Small position, you would take your 7 ticks here. That's a lot of money on 2 contracts. I mean, that's more than 150 USD on just 2 contracts. Imagine more. So 3 PLCs at the same level. The market went back to it. Always, when the market goes back to a level like this one, please just observe. Just do Netflix. Just watch. Just look at what the market is going to do. Okay, so news, never mind. I'm gonna come back to you later. So as you can see, yeah, that's the reason why we had low volume, because news were coming. So usually when you spot less volume, for example, 190, 200, 400, like when you see volume like this, please just stay away of the market, because the market itself doesn't know what is it doing, nor the people. Okay, the institutionals there just do whatever with the market because the volume is low. Like they can just manipulate it however they want. So that's not the volume I want you to trade. I want you to trade high volume because it's not easy to bounce it. It's not easy to move a market. Do you know how much money it takes to just move a market? Okay, that's 7,000 just one contract to have 150. That's 7,000 times 150. If you think that's 3, well, that's 21k. Okay, that's 21k USD against I don't know, 7 million, another 7 million here, another 8, 9 million, 10 million maybe. Well, yeah, I suppose that's more than 10 million. Okay, so this is what you should understand, like 1,000 times 7,000. So each contract is worth a lot of money. And for you to move markets, you need lots of orders. You're only just 1,000, 2,000, 3,000. One candlestick is not going to decide what the market's going to do. So that is why when you have low volume, the market moves however it wants, because there's not much volume. And when there's a lot of volume, it's not easy to move the market because people are pushing. I mean, people want to take it down. Then you have people who want to take it out, okay? So you should understand that this is just supply and demand. This is just a normal market as your local market you have next to you. Well, you should treat your futures market same way, and all the stock market in general is basically the same thing. Okay, so the market gave us quick imbalances here, went to the same imbalance level. So as I told you already, when you see stacked imbalance, we have already installed on the software this highlight. So just wait for the market to go back to it and see how is it going to react. If you see that now you get buying stacked imbalances instead, well, that's maybe people that got stronger this time. I mean, like, see how the market turns. It was stacked imbalance before, selling stacked imbalance. Now it's buying stacked imbalances, and that means the conditions have changed in the market. And what you should do is that you should look for an opportunity maybe. I mean, it's not easy to find an opportunity, but you should just potentially find one, okay? So yes, the market just started going sideways. It's like the market is consolidating. And what I told you before is that when I say consolidation or low volume, I prefer to stay away of the market. Why? Because I don't want to risk it. I don't want to risk my money doing random stuff. Okay, so this is the setup I explained, the POC node, I guess. So we have the first POC at this level. The reversal one is higher, while the next POC is lower than both, okay? Which means the volume has moved. Like you can see how POCs control the candlestick. Okay, I want you guys to don't look at the numbers, don't look at all these red candlesticks. Just look at the POC, okay? See how the POC evolves. This is the actual candlestick. It's just this POC because it is the thing deciding everything. So here the market went from this level up to this level, down here, stayed on the same level, went up. Like, please try to read the market by POCs, not by candlesticks only. Like, candlesticks are important. Red or green, it's important. But you should also use POC as a level. Okay, so let's see what's going to happen. It's gonna be a good move if it closes on red. Okay, so let's see if the trap traders setup's going to be approved. No, it didn't. Yes, like, yes, that's a good setup, but not every day. You should look for, let's say, for setups. Look for confirmation. Look for the market telling you, like, yes, I am going to go down. Not just seeing the trap trader setup. Oh yes, this guy on YouTube told me just whenever you see it, just go in. I don't do that, I'm sorry. So we spotted the absorption here. You can see this candle, red candlestick, big delta number, positive delta. The market did some quick move to get some traders out. Like, the market is liquidity. Many people became the liquidity here, and then it fell off. Then it went down. So it was a great market here. We saw a lot of great opportunities in this first 20 minutes already. Let's make it 3 times. Okay, so quick correction, POC again, POC setup. This one, the first one down there, then go up. So you should find exact similar setups while trading order flow. Look for confirmation in every single thing. Like we see here, we have delta flip, for example. Like you see, minimum max delta was 0. Here it was the opposite. Minimum delta was 2. So it signals a great shift in from sellers to buyers. So the other one became stronger. And we also, with the POC and all of the confirmation the order flow gives you, the market shifted sideways. So the market gives you a lot of trade setups every single day. You just gotta be hitting those exact high quality setups only, high quality trades. That's what we look for. 1-2 trades a day are enough for you if you want to maintain growth every single month. So that's what I do. Try to find 2 to 3 trades. That's all. Don't do a lot. Don't try to push the market. Trade 2-3 times only. If it doesn't give you great setups, I mean, you can just get out of the market, okay? No need to keep trading all the time. So this was all about today. Thank you guys for your time watching this live stream. Sorry, this video. If you got any questions for me, you can just let me know in the comment section. Please do subscribe and like so you can keep up with the content. Thank you and have a great day.